Hello everyone, this is Juan Sarmiento and today is Friday, August the 4th. Let's take a look at our trades and what needs adjustment. Let's take a look at our current positions. We have the P&L for the year is $800 on the negative, so which means we've been recovering since the beginning of the year. Which is good. But let's take a look at our trades, and I have one to suggest. We have option buying power of 40,000, which means we can do 4 or additional trades. So let's start with Adobe. Take a look at the chart. Adobe is at the top. Here it's correcting a little bit, but I think it's doing well. Let's go to the Analyze tab. And here it says August the 18th. Well, that's 14 days to expiration. And we are in a position here that looks pretty good. So look at this risk profile. No need to the August 18th, let's see, that's 14 days to expiration. So we can wait until next week to do any changes. In the meantime, look at this, the delta is neutral and the stock is slowing down a little bit. So that looks pretty good for what we've seen in this market. So I'm gonna leave it alone. Let's go to CRM. And here we have August the 11th, that's 1 week for today. So yeah, I think we could do the rollover on this one. Let's go to the monitor tab, go back 100 days. And we just have the original trade. You can see field here. You can look at the trade history. Okay, so then you can say analyze trade. Okay, so with 1 week to expiration, you can do the rolling over right now because we are close to the strike price of both puts and calls. We can do them both at the same time. So analyze rolling, and we're going to sell 1 week. To the options that we're going to sell are going to be, let's say 30 days to expiration. That the closest will be September 1st or September the 8th. I'm going to do the 8th. And then you can say hide positions so that we can see this is the resulting position. We're going to get a credit of 1120. Okay, so that we are getting quite a bit of cash back. Okay, that's normal when you do the rollover. So here it is, we're going to get $2,240. So that's removed from my value of my trade. Okay, so you're releasing cash that then you can use for other trades. Let's go to Google here. Google, this is an option trade we bought. Let's go to the monitor tab. We bought it just a few days back on the 28th of July. We can say analyze trade, and that's my trade, and you can see that there is a bit of a loss, but not much. That's perfect. I don't need to change anything. Let's go to Len. Let's see, show all. And you can see that last week I rolled over the call, but I left the put alone, thinking, well, this one is going to expire for sure, and it is due to expire today, and it's very close to expiring. So we can sell the put right now. Okay, so I'm gonna sell. I'm only doing this because the other one is expiring today. Let's say put, and I'm getting 150 times 3. Okay, so this other one here, this put, you can close it, but it's about to expire, so I don't care. Obviously, with $7 difference, $6 difference, that doesn't matter. The market is closing today. I wouldn't try it yesterday. I'm going to try this today. Not try. I know there's no trying is doing. Okay, so I'm going to sell this put, and then now my trade, I'm getting back $450. And then this call will go away. So let me just show you. This is what it looks like right now. This put going away today, and I end up with my typical Gini trade. Okay, let's move on to Schwab here. And this one here, you have August, that's next week. No, that's 2 weeks from now, so no need to change that either. Let's go to the monitor tab and copy this, analyze trade, and now we have a simulation, and any trade thereafter we could bring in. And so right now we have a little bit of a profit of $35. Okay, so I'm in the cone here, I'm happy with that. We'll leave it alone. Let's go to UNH. And here, this is August. Look how the cone has been. Let me just make sure that this is the correct trade. Go to the monitor tab and say analyze trade. And then you can hide simulations or hide positions. Either way, you get the same result. Would I do a rollover here? Not necessarily. This is 12 days to expiration. We leave it alone. Okay, good. So let's go to a potential trade that I'm looking getting a signal on is Amazon, which reported earnings, its stock jump, volatility drop, everything is great. All right, so look at the earnings. They came up with 65, that's twice as much as they were expecting, of 33 cents. Great, that's a big plus on our side. I'm motivated. The stock jumped how much? 10% or more? Yes, 10%. Another positive for this trade. So you have two things. The earnings was a beat by 50%, and the stock jumped 10%. So that's great. On top of that is near the 52-week high. And so let's go trade this stock. Okay, come over here. I'm going to show you how to do this. We're going to look for an option that is 90 days or more to expiration. November sounds good. And I'm going to look for the closest strike price, 140. So I'm going to click on the ask and make sure you click it twice. And oops, that's not what I wanted to do. Sorry, let's start over. Ask and ask again. So now we have two October 23 140 calls, and we're gonna do the same for the puts, two of them. Make sure you press the control key and ask again. And this is two straddles. This is what it would look like. Okay, let me just copy that, what I just did. Okay, so this is my long straddle, two long straddles, as a matter of fact, and this is what it would look like. Okay, so hey, if the stock stays right here, we're gonna lose $3,000. Well, no, because I'm gonna sell front month options against it. Let's say the 35 days to expiration, September the 8th. Same strike price, 140. Press the control key, and we're gonna click on the bid for the short call and the short put. And here's my trade. Here we have it. Now we need to, is this gonna cost us 20.85. Let's see, create duplicate order, confirm and send. Would this be $2,000? Okay, so that means I can make 5 copies of this. Well, not quite 5, perhaps 4. I'd say 5 is okay. You can see my net liquid value is close to $100,000. So 5 of these, say multiple, I say 5 is a little over $10,000. I say, okay, it's a little, I'm perfectly happy with that, okay? That is our trade. You can save it. Let's send that off. Oh yeah, you can also do other calculations. When you create a duplicate order, see the mid and the natural, and if the difference is less than 3%, you are fine. And I know Amazon is one of the most liquid stocks, so I don't have that problem. If you want to take a look at the volatility skew, come over here, go to the trade tab and look for the current IV percentile. If that number is below 15%, you're fine. And then the last thing we need to do is, looking at our trade here, look at the volatility, okay? This is gonna be borderline, but here's, you take your calculator, and this is what we're gonna do. The back month, 32.26, so average those two, 32.8 plus 26.6 divided by 2, that's the average of the back month options, the implied volatility, okay? This number here in the trade at the bottom right corner of your screen. So let's save that. And do the same calculation for your front month options, 31.2 plus 26.3 divided by 2, and we subtract it from the number we just saved, and you can see that's less than 3%, so they have, the front month and the back month have about the same volatility. Okay, so that's a good trade and it's working now. And we got it filled. We're waiting for this to be filled. It should get filled. You can see that the credit is, the price is very close to the mark. So that should get filled shortly. If not, I will alter it. Okay, here is my trades. Yeah. So the Amazon got filled and the land got filled. Good. All right, I think that's all for today. Thank you very much for joining me and see you next time. Bye-bye.